Good morning, everyone, and welcome to the European crossover webinar. And one moment. There we go. And welcome to the European crossover webinar. And sorry, time just got back. Just a couple minutes ahead, behind myself. I didn't even realize it was that time. But anyway, I think it was started 3 minutes late. But anyway, here we are. And we are seeing the cash dollar index just pare back a little bit even further. Yesterday was kind of strange because I thought that we would actually see some strength in the dollar, and lo and behold, we saw the euro strengthen. We're still above 18 at this point. And certainly also another thing is with equities. I didn't expect especially after the prior day when we'd sold off going into the close, and I mean yesterday, but the day even before that. And we saw this let's say complete turnaround, but we saw, we saw an extension of this overall up move, I guess I should go on and say. But once again, as I mentioned, a bit of a surprise of that. And then remember, we had seen gold sell off and gold came back, in pretty good fashion in and of itself also. So yesterday was a bit of a strange day to go and say the very least. But as I mentioned, we've got the euro, and we'll go and take a quick pop on that. You can see it pushing above 18. And, let me go and open this up. I thought we were going to go and pull further back here in the euro, and let's go and switch it into the daily chart. When we came here yesterday, because obviously this was yesterday, but we already started trade. But I thought based on the prior day before that, it looked like we were open to pull back even further. And instead we turn around, we come back and we take out 118. We close a little bit lower, but here we are pushing it and going, above that. And it's just a bit of a surprise here in that move, but it is what it is. That being said, let me go on and pull in the data here. And we did get Aussie employment that came out. Obviously, like I say, we're into the 13th, but with the way that time goes around, the day kicks off really with New Zealand and Aussie. So we did get employment data, which came in actually at 114,000. Reuters post with 40,000. So it was stronger than expected. But remember, one of the things that we had covered was that they were expecting the numbers to look better than they actually were because this was before the Victorian the lockdown in Victoria. So it was a number that should have been, I can take a look here with the Aussie dollar, but a number that should have gone and seen this pair back. But we shall go and see. Rolling into today, we did get German CPI numbers that came in pretty much in line, 0.5% lower, and then a wholesale price index, which has actually come out 0.5%. These came in well over an hour and a half ago, and then of course Spanish CPI, which came in same thing, pretty much in line with what they were expecting here. Spanish CPI, and then as we move on later, that's going to be, and I don't know what this got this country near Slovakia. Got to get rid of that thing. I don't know how that got ended up adding. Also, I'm not sure why, but anyway, moving into the States, and we will have import-export prices. It's going to be at 8:30 Eastern, and further out, that will be it. Just the import-export, as well as initial jobs claims, of course. Weekly number probably will garner some attention. And let's go move this out of the way. And let's go and take a look, as I mentioned, about equities. I'll move into that. And you can see this dip. We are pushing a little bit on the lower end right now. Uh, we saw a jump right back up in here, and this is really only on the 5-minute chart. But as I mentioned, we really pushed here, and we finally started to pair back towards the end of the day, and we've kind of hung around, hung around. I'd like to first definitely to go in and see us move a little bit lower. I'm actually currently short right now with the NQ, and still we saw that obviously we saw S&P's going to move up even higher too. You know, I guess it's just money chasing money at this point as far as the momentum, but I still think that it just seems odd that, uh, especially with NQ, we did get Cisco earnings yesterday, and they weren't too hot. So, I mean that they weren't great at all. Uh, Looking for potentially for us to see if we do go in and pull down. Now, the key thing that I'm looking at is we can go and get a foothold above, what am I saying? Below 11,009. Then we can start to see if we can go in and work lower in this market. But we shall go and see. Referencing also gold market, obviously we had seen that good strong recovery. We kind of danced around yesterday. We paired back. Remember we talked about that 1956. I think that was a 38%. And we saw a pretty good sell-off in there. I think it was about a $30 sell-off almost. And then the market came back and but still holding up relatively well. But once again, like I said, a bit surprised here that the way equity markets have held up so well. So that being said, we'll go on and go over the stories. I don't know why Reuters is slow. But anyway, the Australian and New Zealand dollars edge up in the jobs data upbeat with caveats. We talked about that with the story we covered at the beginning of the week. The Australian New Zealand dollars edged higher on Thursday as risk sentiment improved globally, with Australian jobs data proved surprisingly upbeat in July ahead of the latest lockdown in Victoria. But they already said that. If you remember when we covered that, it said, you know, the numbers aren't going to show this lockdown. And so it would be really a number that you'd be looking to go on fade. But anyway, that being said, the Aussie firmed to 71.70 from a low of 71.09 the day before, but the resistance was met around 71.90. But it also remains, I think our resistance, buy short resistance, we'll cover that. I think it was 71.92 actually. It also remains short of the recent 18-month peak of 72.42. The Kiwi stood at 65.75, having bounced from a trough of 65.24. Official data showed Australian employment jumped 114,700 jobs in July, for above the median forecast of 40,000, though estimates had been usually wide given the extreme fluctuation caused by the coronavirus lockdown. The jobless rate rose to 7.5 from 7.4, again under the forecast of 7.8, with full-time jobs rose 43,500. Still, the damage done by the lockdown was clear in the number of unemployed, which topped 1 million for the first time ever, while the employment was still under 500,000 below its March level. The latest health restrictions in Victoria will also deal a setback to employment this month. While today's data looked better than expected, timing is everything, said Sarah Hunter, chief economist with BIS Oxford Economics. Restrictions have tightened and conditions worsened since then, with payrolls confirming that the employment in Victoria is now falling. Employment is likely to slip back in August. The RBA still expects unemployment to rise towards 10% by the end of the year and only decline slowly by 7% by mid-2022. Earlier this month, the bank reiterated it was on hold for the time being, though it stepped up its bond buying, taking in a 5 billion Aussie dollars, which adjusted for the US would be 3.59 billion, just this week after 2 months of no purchases at all. That has helped the 3-year Aussie bonds back to just a little over a quarter basis point and near the RBA's official interest rate of a quarter point from a top of 30% last week. And the dollar loses ground amid doubts about the U.S. stimulus. The dollar fell against most of its peers on Thursday amid fading hopes for a compromise between Republicans and Democrats over additional stimulus for the U.S. economy. The Aussie dollar rose after better than expected job data since eased concerns about a persistent coronavirus outbreak in the country's second largest city. The greenback was hampered by a decline in treasury yields, but analysts said this is likely only a temporary setback because U.S. lawmakers will eventually agree to more stimulus to help the economy to recover from the coronavirus. The dollar needs positive news on the stimulus, right? Excuse me, to rise further, but I'm sure we'll get there because these politicians can't go back to the constituencies empty-handed, said Masafumi Yamamoto. Once this happens, gains in the dollar yen could be a catalyst for the dollar gains against other currencies. Against the euro, the dollar fell to 1804. Of course, we are above 18 right now, and the pound rose 15 tenths to 30.53. The dollar is lower against the safe haven harbor Swiss franc, and the onshore yuan briefly rose to a 5-month high before steadying at 69.42. Trump accused congressional Democrats on Wednesday of not wanting to negotiate over U.S. coronavirus aid package as top Republican and Democrat negotiators traded blame for a 5-day lapse in talks over the relief legislation. The pandemic has taken a particularly heavily toll on the United States, which has killed more people than any other country. Millions of U.S. workers have lost jobs, and supplemental federal unemployment benefits expired last month. Market sentiment has swung between optimism and pessimism, but analysts argue that more stimulus is the most likely outcome because without a U.S. economic recovery could stall. The U.S. dollar index gained a basket index against a basket of currencies were little unchanged on Thursday, but was still above the 2-year low it reached last week. Elsewhere in currencies, the Aussie dollar traded at 71.61, supported by the data showing the economy created 3 times as many jobs as expected in July. Also, the RBNZ will consider more monetary stimulus if there are periods of resurgence in local coronavirus infections and renewed lockdowns in the country. Deputy Governor Jeff Baskin told Reuters on Thursday. So with that said, let's go on and move into the analysis. We are seeing this trying to ease back a little bit. So let's see if we can't move a little bit lower here. So let's go on and move into the analysis. So the euro found a bid on Wednesday. We saw that right here, rallying back over 18. Resistance on Thursday will be 1845. We're not very far from that. You can see that right here, with support at 1743. So 1845. $17.43. Let's go move on to the cable. Once again, take a look at this on the daily chart. So cable, after a slide back on Tuesday, stayed in a tight range. Support will be 29.56 with resistance at 30.89. So 30.89, we're not too far. We just about, actually it looks like we just about clipped up there to 30.89, but that is resistance. just an extra pip higher. And support, we did actually allow that to work a little bit lower for 29.56. And we'll move into the Aussie dollar. So the Aussie stepped back on Wednesday, but came back to close above the prior 3 days close. As you can see here, we came here. Look at this, the close here, and even including the close here. Resistance will be 71.92, which I think they mentioned that the high was 71.90. So it looks like we were able to capture that or keep it in check. We're supported 70.70. So the high was 71.86, and we had 71.92 as our resistance. And supported 70.70. And on to the QE. See, we saw that little bit of a hammer bottom, and although we're actually pricing a little bit lower, I mean, within reason, but I'm just saying we're not seeing a push back up here at this point. The Kiwi found the bids at the bias chart support. We remember we had that at 65.32, rallying back towards 76. Didn't mean to put 76 cents. I'm not sure. I meant to say 66. Resistance will be 66.28 with support at 65.32. So give it a, with this little bit of a hammer. Thought they might be able to push back above. They haven't. So, but nonetheless, 66.28. But we will retain support of 65.32. And you can see that held right there. I believe actually to the pip too, that 65.32. The low was, oh, I'm sorry, 65.22. You can see actually we did get past it to 32, although we did rebound back above it, but you guys low as 22. Our bias chart support was here at 32. Let's go on and move on now to the dollar CAD. So the dollar CAD broke to new lows on Tuesday, opening the door for a challenge of 32 even with resistance at 32.95. Well, you can see here, we broke these are the lowest lows we've had in a very long time. When you look back here, you'd have to go all the way back to be below this area here, all the way back here to February. And but you can see the doors open for us to challenge down to 132 even. You see that here, and resistance will be 32.95. Trading rather quiet actually right now, but once again 32 and 32.95. And on to the dollar peso. Now the dollar peso didn't go anywhere. It's just still stuck in the range. So there's no changes here. Look at this. I mean, it's unbelievable how as quiet as it's been. Look how quiet it is right now. It is just not even moving. So no changes there. Um, we still have 22.20, 22.58, and we're just not even moving here. We're simply dead in the water. Like I said, it was rut bound, stuck in a rut. Um, let's go move into the dollar yen. This one has moved higher as we saw U.S. interest rates move higher at the time, and certainly opened the door for us to push beyond the 647. And I believe the bias chart yesterday was for um, 702, and I think that was a high too. Yeah, the high was 703. Actually, nope, 702, and that's what we had, and that's where although we still finished closely in there, um, it wasn't like as if we rolled off very hard from that level, but it did keep the market in check. So the dollar yen continued its upward advance, tagging the bias chart resistance at 702. Bias chart resistance will be 729 with support at 627. And let's go move into the cash dollar index. This was really a surprise. This and the euro. Remember, we were in this, we were trading in the zone here, 93.17 up to 93.91, and it looked like we were actually going to go in and push further out into this zone, out of this zone here, and we just turned around and rolled right back down the hill, and that was a bit of a surprise. So the dollar index slid lower, opening a potential re-challenge of 92.89. You can see that down here. Support will be 93.17, which is right where we're at, with resistance at 93.80. And on to the cross rates. Well, you can see here, we're trading a very, very quiet range here. We're just stuck just dead center here. So let me don't check this, but I wouldn't think there'd be any changes here. 70.43 and 69.41. So no changes here on the Kiwi yen on the bias chart support resistance. Going to the euro yen. Now that, with the strength of the euro, we should see a higher move, and certainly we have. And this has continued to scoot higher. Boy, look at that close yesterday. Whew. We are just going and going. There's 26.63 there. We get a little resistance too. 26.63. So that'll be the resistance, 26.63. And support will be right here at the 25.52, the breakout area here. And onto the euro odd. Certainly a pretty good little move up. We certainly have pushed beyond the 65.11. Resistance, we're just going to work with the touches right here. So you see this one right here and here. So we'll go right there, 65.39. And support, you can see the close here, the high there, coming across. I'll actually put it right here. It's going to be 64.31. Let's just go with this. And actually, that's already the low there. Yeah, let's just go with that. We'll call it 64.30. Seems a little bit low, but if we do start to see it pare back, 64.30. Don't think we'd get there today, but it would be a level for them to look at on a pullback. And also the Euro Kiwi showing its strength also. I'm going to go right there, which is 80.36. 80.36. And support is just going to be this high right there on a pullback, and that would come in right at 79.16. On to the Aussie yen. Still holding up rather well and trying to press a little bit higher. We're actually going to go right here. You see this high bar there? All the way across, which would be 76.71. Looks like we almost made it up there too. So 76.71. Boys, these have just hung on to those gains. It's unbelievable. And support, we'll look onto a 2 hour, just below right there, 76.19. And onto the guppy. Up, up and away. No. But it's looking on a 2-hour. Bear with me. Right here, that would be 40.22. $40.22. So bias chart resistance. Almost looks like we're waking the sleeping giant here. 40.22, and on the support on the pullback, it'd be right here, 38.72. And with the sterling odd, we had 83.36 on the upside, 82.71 on the downside. We did dip further here. You can see that. So we actually came below this area here, 81.60. Now we got below that, but we'll hold that for our support. Didn't expect that dip back there. So 81.60. Obviously on the Aussie jobs report. And resistance is going to be this close here. Right there. 82.84. And that'll take care of FX. You can see that we had a pretty good run up in here in these equities. You can see here, look at this Apple. Look at this strong close. Facebook tried to push up high, but once again, look at Apple and then Microsoft. It did come into support, which was into that 202 area, but we certainly jumped right back into that. So we've seen a bit of a pushback after the dips from the prior day. You can see, look at the strong close with NVIDIA. Even Intel coming back. Still under a lot of pressure, but came back. And then Netflix. It broke that trend line. It's still below the trend line. You can see here. But obviously these main drivers, Apple and Microsoft, certainly pushed us higher. Google, a little bit of a rebound here. And then Amazon certainly pushed back a little bit higher. But the two main drivers, especially Apple and Microsoft. Microsoft came back, but Apple obviously still pushing even higher. As I mentioned here with equity indexes, and gold after that rebound, it's kind of gone a little bit quiet. We had gotten up to, remember that 1856 area there. Actually, looks like we pushed even higher then. But on that first go round, I said 1856, but meant 1956. It was 38%. And then we turned around and dropped back. Looks like we revisited, took another dip here into the 20s. And we're kind of sitting here in 1940. As I mentioned, we saw this move higher in the NASDAQ, and really this is rather interesting. I guess the key thing would have been, that's why I marked it right here, was, and that was previous to the open, was that we saw that big move lower, which really opened the door for basically a bear setup, and we came back and we moved above it. The fact that we came back and we held that really would have been key right there. And I didn't pay attention to that. Although that being said, the 11,000 was a good area initially for them to try and take a stand. I guess not right here. I thought they could push even higher, which they did. But I figured the market would run out of gas right in here. That would allow the stops from here to take place. And, you know, the people got short, maybe had their stops triggered. We make a run up into this area and then rotate lower. And we actually pushed higher. And we're still holding up here, but we don't have any stimulus news. And they're still working on that. And maybe we supposedly they're behind closed doors, so maybe we'll hear something. I guess that's what the market's really hanging its hat on, but we shall go and see. So anyway, that's what we have for today. Thanks for joining us here on the European crossover webinar, and we'll see you in the chat room.